Let's dive straight into the strongest sector and the industrial group. As you can see in this table, this is the ETF. You can see XLC, XLK, XLY, XLP. Let's focus on the year-to-date performance. At first glance, I sort out is in this order. Communication is ranking the first. You might wondering why communications. I thought about that initially, but it consists of the heavyweight stocks like Facebook, Netflix, Google. These stocks are considered as the communication stocks, unlike the traditional telecommunication stocks. So these big techs are considered as the communications. So that's why I think they count for around 45 or even 50% in this ETF. That's what's moving this index up. That's why we see that year to date, the performance is around 25%. So it's up about 25%. And next is the technology XLK, which is the NASDAQ 100. And it's up about 21.5%. Very, very strong. The year-to-date performance, very good. And for the consumer discretionary XLY, up about 14%. These three are the top three. But that's only for the S&P. But if we want to dive straight into the industrial groups, let's take a look here. Also sorted by the year-to-date performance. The first one, you can see it here, home builders, ITB. Up until today, year-to-date is about 24%. Home builders has been very, very strong. We cover the DHI, MTH, and KBH. There are quite a number of these home builders hit the all-time high. And next is the SMH, the semiconductors ETF, up about 23% year to date. Out of this, we got the third is the gold miner, GDX, fourth is IGV, software, and fifth is FDN, internet. These are the top five for 14%, 15%, 16%. I especially would like to highlight semicon because when I look at the top five, strike out home builders and strike out gold miners, semicon, software, internet, this certainly growth stocks, tech stocks, growth stocks. But anyway, home builders are doing very well, and it moves as a group, as a team. Definitely pay attention to home builder as well. But I would like to highlight semiconductor because it has been outperforming the market since this year. So let's take a look at the chart here. This is SMH divided by the S&P 500 SPX index. Overall, you can look at it as a relative strength. We compare this ETF to the index. Basically, I tap in straight into the trading view. You can see it right here, SPH divided by SPX. Right now, it hits the axis area. This is the axis area. That could signify some meaningful change if we see that there is a bounce up from here and then breakout of this immediate downtrend line. From this chart, one thing that stands out is this rally. This started like the bottom in October, and after that, it forms a low, higher low, high, higher high. So higher low and higher high throughout. It's a straightforward uptrend since October last year. And also, when we look at the previous downtrend, like this, it didn't show up, but this is the largest upwave that we have ever seen out from this previous downtrend. That classified as a change of character. But still, despite having a change of character, we still have this lower low, and then eventually still have another lower low. There's a lower low throughout. But until we have this move up and then the shallow type of the reaction, and then started another vibrant rally, they actually started another uptrend. This chunk right here is the change of character, which shifted the downtrend at least into a trading range. But in this case, the trading range is of like the routing. The routing, breaking out, come back to have a test the axis area. And right now, this chunk right here, this portion, since end of March until today, SMH, the semiconductor group, has been underperformed the S&P 500. However, it only represented as like an uptrend followed by a pullback. This is considered as a pullback right after a very prolonged uptrend since October last year. That's still considered as very bullish. Right now, if we have this turn up, because it hit the support previously as a resistance, once it's broken, now it becomes support. If we see SMH bounce up from here, it could means that it started to outperform the S&P 500. So it means that a lot of the stocks like AMD, like NVIDIA, like Intel, and also the other semiconductor stocks, Lam Research, Avago, those fields, they could ready to mark up, breaking out from a consolidation. So it depends on their structure. But if we look at it as a group, by the way, this is an ETF, is buyable. You can treat it as a share, and it could start to outperform the S&P 500. That is very meaningful, especially when the leading stocks. Let's take a look next. This is from the VanEck ETF website. The top holdings are shown up here. The leading stocks is NVDA. So NVDA actually account for about 14.5%. And the second is Taiwan Semicon, 11%. But out of all this is certainly the leader. The NVDA, he is the leader. So you can see that we started from like a relative strength comparison, and then we dive into the chart. And if we look at the holdings, this pops up. Not only NVIDIA alone, there are quite a number of them in a very strong structure. So pay attention to whether there is a breakout or whether there is a break against this immediate downtrend line, things like that, because it could start to outperform the S&P 500 based on the relative strength chart. And for the NVDA, it break out last night. Yesterday is just had a breakout. It's the strongest out of all this. Right now, we want to pay attention to the semicon, and also not to forget about the IDB, which is the home builders. A lot of them have a very, very strong structure. Pretty much it's like consolidation, breaking out, coming back to have a test last week, and then moving up. So a lot of them have this kind of the structure. At least we could rely on the highest level and then put a stop below. And these are generally all the all-time high stocks from the home builders. If you want to catch my latest videos, click on the subscribe button and the bell right now so that you get instant notification once I upload my latest video. If you want to check out my online courses, go to tradeprecise.com to find out how to profit consistently from any market without using complex indicator or understanding any financial statement, no matter you are trading or investing.